Midland Wealth Management presents Market Insights.
Hey everyone, this is Dan Zeigler, Portfolio Manager at Midland Wealth Management. I just wanted to provide everyone with a quick recap on the markets for the month of January. Stock returns started the year off building to their gains from 2020. However, in the last week of January, we did see volatility pick up as the S&P 500 had its worst performing week since October of last year and was down about 3.3% for the week. So far for the year, the Nasdaq has made out a small gain of about 1.4% for the month of January. However, the S&P 500 is negative 1%. Several factors may have led to the increased volatility for the last week of January. The initial estimate for GDP for 2020 did contract about 3.5%, marking the largest annual decline since 1946. The fourth quarter GDP grew at an annual rate of 4%. However, many economists are expecting very little growth for the first quarter, with hopes of picking back up later this year. The latest 1.9 trillion stimulus package seems to have lost some momentum, but would certainly help growth if it did pass. On the other hand, we did hear some positive news on another vaccine in the US from Johnson & Johnson pending approval. This would become the third vaccine to enter the market. The vaccine's efficacy rate dropped from 72% in the US to just 57% in South Africa, where there's a highly contagious variant driving most cases and appears to be popping up in the US. So there is some concerns there that it might not be as effective on certain variants of the virus. The vaccine was extremely effective in preventing severe cases of COVID, and it does only require one shot, and storage conditions are much more favorable than Pfizer's and Moderna's. Lately, the market has been fixated on a recent surge in a few heavily shorted individual stock names, such as GameStop and AMC Entertainment. As a mob of Reddit investors piled into these stocks, it created what we call as a short squeeze for large hedge funds that were shorting these companies. Most of these hedge funds that were shorting the stock had to buy back the stock at a much higher price, and some of these hedge funds likely needed to shore up capital and sell some of their higher quality stocks. We will certainly be paying very close attention to this. So far, fourth quarter earnings from companies have improved as 82% of the companies are beating analyst expectations for earnings, and 76% of companies are reporting better revenue than expected. U.S. companies are still expected to report an overall decline of about 2.3% year over year. We all know markets don't go up in a straight line, and it's perfectly normal for markets to experience pullbacks from time to time, which I think is what we are experiencing here. If you didn't get a chance to listen to Midland's Market Outlook webinar last week, be sure to check it out under the Wealth Management tab at midlandsb.com under Market Outlook. It did a great job talking about the potential tax changes under the new administration, interest rates, and equity valuations.